the market is somehow. So I was looking at, we were looking at this major trend line from a month that I plotted out, and I said we could see if we expect a bounce from that place. Now, the month will close. If this daily candle, this monthly candle close bearish, forget. This guy may crash to this place. I'll be predicting this guy immediately close below here. I'll be suspecting because when you have a monthly candle close, it close below major zone like this, it gives the test. So be myself, I don't take cautions. That's why higher time frame it's good to follow higher time frame directions. It will give you or like a map what you need to see. Just follow the higher time frame. I've been saying that this monthly close here and a retest that we may likely see DSY dollar weak maybe to this low or even to this major low here at the course of the year. But fortunately, me myself, I was trading, looking at it I ignored the monthly directions and begin to look at daily directions. Sometimes daily directions can also be deceived, where if you give it to give you buy as if it's buying, but see it collapse. So, in a nutshell, dollar is very, very extremely. But what's bad for me in the market is when dollar is very rare to see dollar falling and to see gold falling also. It's very, very rare. Initially, when dollar is falling, gold supposed to be power and be buying seriously. But dollar is falling, gold is falling, and stock is rising. So that is a kind of weird market. But it is what it is. See what it is. So, guys, DSY is bullish, is bearish. You can see how we are closing. We are closing, daily closing on a bearish. So we continue bearish this guy until price decide to give us a bullish evidence on daily candle again. So for now, let's just continue resuming, look for opportunity to buy any of these currencies at pullback. Number one is pounds. Pound is extremely bullish. You can see how price confidently came to this zone. Then you see how it trigger. So my major focus on pounds, number one, is getting to this high now. Let's see if this high will be what? A liquidity taking. If this high become a liquidity taking, then we may see a slight pullback continuation. Now, the major up that a drawn liquidity is this double top here. So we have this double top here that may stand as a drawn liquidity. So we may likely bind pounds to this place maybe by next month. So I think this is what we'll do. With this weekly candle, we are going to treat this guy on a weekly basis by next week. So by Monday, what we'll do is that if this guy close bullish like this, means that next week before this guy can change to bearish, we need a weekly candle to close below here. So I think this is format we'll now be treating every day based on daily. Now we'll treat every week based on weekly directions. I will treat every day based on previous daily candle close. So if daily candles is bullish, when we come on session, all we need to do is to remain bullish, wait for a pullback and bullish. And if daily direction, that's what we'll be using to take a daily trade. So by next week now, we have seen this weekly candle close with a very strong body. So if by next week, anything pull back, maybe by next week, anything pull back, all we are looking for will not do what? Sell the pullback, but we look for opportunity what? To go long on the pullback. So now let's say this guy bearish to, let's say bearish to this area, for example, next week, and we target a previous weekly. You can see the gap between a weekly that is over 280 pips. So any pullback next week, it will be, we're just looking for opportunity word. We'll consider it as a pullback, not as a reversal. Now, for us to have a reversal on this guy, we need a weekly candle, a bearish candle. We need a bearish candle to close. We see a bearish engulfing candle that close like this. Then we know that the next upper week will be what? Will be bearish for for this currency pair. So today's Friday, the market is bullish, and that's where you can see yesterday, see it almost 3 days now. See yesterday we bullish. 2 days ago. Now, if we have resumed bullish, we go to smaller time frame, look for entry here. So this yesterday, as for day trading, so yesterday now we have closed with about 100 pips. So today again, we remain bullish today. Let's see. But I don't know if this guy will be a barrier. So otherwise, maybe we'll aim another up to 100 pips today again. So, but now the reason why I'm so concerned is this guy here. I don't know if we hold because it's a major, it's a liquidity. So if that liquidity will hold, or look at it, this high here, it's a liquidity. So I don't know if they will reject price from this liquidity or will confirm a breakout. So for us to know to see a breakout from that, I will give us a 4 hours closure. So we want to see 4-hour candle close above anything here. So that will give us a view that we are continuing. So let's now go to smaller time frame now. Now that we know that the daily bias now is bullish, so all we shall engage is bullish, is continuing to bullish. So we can see that on a smaller time frame, how we break structure. Is this guy break structure? Yes, break structure. So we have a break of structure, and price came down to this thing. And our price came down to discount. And now, so we need for you to engage, now, all you need to do, we are giving out this low, this high. So wait for what? A break of this high. So we need another break of structure from that high. So a break of structure from this side now. So we now confirm that this guy, which is will be very good to go higher. So what, in summary, from USD, GBP USD, is that it's better to look for a buy opportunity than a sell opportunity. So that is my own perspective based on daily projection. Now, when you see this candle open, this was yesterday daily candle. This was yesterday daily candle close. We have a daily candle close yesterday. So you can see that we have this candle open, immediately open. What did he do? He do a wick out. Then, so a formation like this, price already closed a low of the day. So it tended toward it may create a higher. So price work most of this time 80%. So it may create a higher. Now you can see how this one, the same thing, this one close, it formed the low of the day, we have a higher push up. This guy open, form a low of the day, a higher push out. So you can see the chances of you can see this, a low of the day, price close, open, form a low of the day, we have a whip out. So these are, I'm showing you a powerful secret. This is a powerful secret that I said we want to do a day trading. How the daily candle open, the daily candle will determine, okay, in the next day, this is what I'm going to engage. So for me, I'll be more to engage on buy side on GU than to sell. So before this guy can now, if this guy will be in sell market, then maybe we need an engulfing candle at the end of today. So if we see an engulfing candle that engulf yesterday, let's say today now close bearish and engulf, don't forget that this place is a major zone. It's a liquidity zone. So if we see an engulfing candle today that engulf this bullish candle of yesterday, then on Monday we'll change our bias from bullish, now we're not changing to bearish. So the possibility that we could bearish back to this low for this major support again, the chances is very high. So that is it. So but for now, we are bullish and that will remain bullish. So we go to Euro USD. So the same thing is applicable on Euro USD. The same thing is applicable. We are bullish seriously on Euro USD. And all you need to do is look for a what? Maybe a pullback. If it gives a pullback. So I'm now on 15 minutes now. So since we want to do a day trading, I think 15 minutes are best. It's our best place to go. Now I can see something. I don't know if price will come back here. So we have seen, what do we see here? We see a break of structure, right? You see a break of structure. Then there's this tiny imbalance that is here. I don't know if price will come back here. That would be a good place to buy. But price is currently reacting to where? To this breaker. So this is one of the institutional reference that you can price can also react to and start moving. So if price is reacting to that breaker, then price will not come here. But if price make a pullback, I think something like this, best place to engage this buy.
Hello, Mr. Val. Please mute everybody. Mr. Val.
Okay.
Help us to mute them.
All right. Everybody's muted. So something of this nature, if the pullback will come, cannot target at least high. This was yesterday high. So I'm very certain that this high will be taken. Yesterday I will be taking, very certain. So the week, okay, we did not clear liquidity much from Asia this morning. So that so we can still have that pullback. We can still have that pullback. Or because of if price start bullish seriously, that pullback may not, that breaker block, this breaker block that I mark out, we just will price and price will push up. Now that not mean that you should start buying them, because if you enter a buy and it's too high, you can enter a buy and it start coming down. So all you need to do is to wait for another structural. So if today is going to end bullish, then price will come and break this structure. So price will come and break this structure. So there's a need for price to break this structure. Then after break, a pullback cannot come in. Maybe a pullback after breaking, a pullback cannot come in, then we engage. So these are the two ways. Is whether use this tiny fair value gap in 15 minutes to wait for a buy, engage buy, then or wait for another structure to break. But in summary, the daily direction is bullish. The daily direction is bullish, and I remain bullish on USD, otherwise price form otherwise. So we can see how price open and form a low of the day. So low of the day already formed. Low of the day already formed during New York in this London session. So I can see that price already formed a low of the day during London. This yellow bar I used to indicate London and this thing. So this lows they are already formed in London, and now price is pushing higher. So that is it. You can see price with weekly market open of today's market, price come down, follow of the day, now give us a change of character. So throughout today, we are experiencing what? A bullish euro, a bullish GBP USD. Let's see, this is previous high. How price will take out this previous high, taking. So I think that would be about let's say from low of the day. I think the range, this guy is around 50 to 60 pips range. So yes, when price take low of the day, I think a high of yesterday, that would be about 60 pips. So from there we can now see maybe a pullback on this guy. Every currency has their daily range that they have. Is GBP that has the power to do like 100 to 140. Gold is, you can see, gold is crazy. That's what I'm saying. Dollar is falling, gold is falling. It's so weird. So let's see how this guy will hold up. For now, I don't want to do anything on gold. So let's just leave this guy for now until maybe this 4 hours candle. Now we are in a major strong zone. We are what? In a major strong zone. That's why I put these two lines. We are in major strong zone. So let's see reaction. This 4 hour candle. Let's see. Number one, maybe by 2. This candle, now let's say close bearish. It means that we are still bearish. So you can look for a bearish opportunity. But if we see by 2 o'clock, if another 4 hour candle close bullish that over this, then the tendency that price may start pushing back. I still have some gaps. You can see market has been you're always creating some. You can see even yesterday, you can see these are the evidence to prove that a lot of things is happening in the market. A lot of technical things is happening that beyond our compression. Because when price is opening of price is forming gap like this. See one gap here, see another one. So with the time, price will come back to fill all this. But for now, it's not ready. So we just leave gold for the gold diggers. Okay, so that made 27 USD. All right. So we just leave gold for the gold diggers. And so if you want to engage, you can look for for now, you can begin to look for a sell opportunity or opportunity. But me, I don't like essential whereby that's why bearish, gold is bearish. So you can just begin to engage in your scalping sell opportunity. Sell opportunity. I don't know where this guy is going. Don't know. So that is my take on gold. See candle. What's going on? Okay, maybe maybe they want to feed this liquidity here. Let me put a line on this. No, this guy here, there are a lot of liquidity here. This guy, maybe that's where they are coming to this week. You can see everything here is liquidity. So let me just pause it like this and see as market reacts in this zone. So leave gold for the gold digger. So dollar fumble. AUD are resumed back. So by today we'll know. It depends how this guy is still on a resistance zone. So this thing pay me that I missed out from this where I look to buy from. That was a nice bounce. That was a nice bounce. A nice bounce there, but I forgot to set the buy limit. This guy drove out close to 200 pips. So way forward, if dollar continue weakening, then all this guy will begin to push up. It's only gold that gold supposed to be buying seriously now. The way this dollar weak, supposed to see gold buying seriously, but so this is another target. So if you see a candle close, a daily close above this red zone, by next week, we'll engage to buy AUD USD. Okay, Mr. Femi, abeg o, I make the nonsense from it yesterday. Abeg, I don't I don't leave gold for you. Gold diggers. Though, I think the spending order we have, yes, it's on gold. It activated now, and it gave close to 200 pips now. So that pending order I set initially on Wednesday. Yes, it was on Wednesday. Price did not cover the gap, but it bought a little. But yesterday, price came back to cover that gap and bought, and which it delivered about 200 pips. That is, this is where it is here. I'm coming. Let me go to 4 hours. I'll show you.
Hello, Val.
Yes.
Good morning. Good morning, everyone.
Yeah, go ahead, sir.
Okay,
So it was this one. It was this week. It was here. Go ahead, sir.
okay, so
Are you talking? You want to talk about gold?
yes. Can you just go to the daily chart? Let's just look at the swings that we have. Yeah, very good. These are good. So can you take your Fibonacci from there? Yes. Take your Fibonacci from there to that higher. Let's see the likely zone, what gold is trying to do. No. Yes.
This is how we will use. This is how we
Yes.
will use.
So can we look at 61.8? Put the 61.8 level there. I think that should be that week in that silver region. 61.8. Yeah.
Yes, the bottom of that week.
Yes. So that week, possibly gold is coming to. There's something unique about that week where you have that 61.8.
There are liquidity now. There are a lot of
Yeah.
liquidity on that week.
So even where it is,
the
trying where it is now, it's trying to take out the liquidity from. Consider that low that was like 3 weeks, 3 weeks away, 3 weeks away. There's a low there, and then where your cursor is. Hello, can you hear me?
Yes.
Okay, yes, it was and that low is coinciding with a section by your left. Yes, go your left a bit. Yeah, squeeze section. No. Just before that tie. Where you have the reactions, like 4 candles. Yes, that zone. So possibly gold is trying to come to find a base. And that zone is coinciding with 61.0. So this would likely be a zone Please, can you meet Mr. Manuel, please?
Okay, I'm coming.
So now the reason why I said this is where we should work out for is because gold has just truncated the low, 3 days low, 1, 2, 3, 4 days low. That's truncated the low for 4 days. So we are likely going to see it pushing down more to find a bottom, a base. And then the best zone, the best place where we can position to buy is where we just plotted. So at where it is, where we just plotted now, the silver zone. So that's where I will be paying attention. Now let's go to 4 hours. Let's see.
Why, Mr. Man? I'm mute you now. Why is it coming up again?
Let's go to 4 hours and see. So Yeah, so these 4 hours, what we are likely going to be looking at doing here, can you move your crosshair a bit to the lows of yesterday? Those lows of yesterday. No, not that one, the one above it. Yes, these two by your right. Yes, just put a line there. So yeah, good. So, and then there's a fair value gap. Just
I'm looking at this gap here.
yeah.
This
Well,
liquid void there, gap void there. So
well, I don't know if it will get to that point before it drop down again. So what we'll be looking for is to sell after a pull back down to the shaded zone for a very strong buy. So for you to also know if that is where we should be looking at selling, you can use a Fibonacci and then plot on that downswing that it did between yesterday and now. Yes, take it down. Go to to that where
no,
it
we
is.
have not. The reason is that there's no pullback yet, so we can't put our there's no swing low yet, so we
Yes,
can't put our low.
let's just assume that it's going to pull back from there.
Okay.
That's what I'm saying. So if it's going to pull back from there, so look at where you have your 61.8 and 50. That silver zone is where likely, okay, that's where you have your gap.
Yes.
So let's begin to watch out for the pullback. If the pullback is going to happen today, that place you have your gap is more likely where we're going to take a sell down because it has truncated the low of yesterday and then 2 days ago. So gold is likely going to go down further, maybe to test the 61.8 of the daily swing, where we have the silver zone. So that's the perspective, as technical perspective. And then another reason why we may be having gold going down further is because of the peace talk. I think US is trying to, broker a peace deal between the Iran and then Israel. And so it's like we may likely have a headway. So people are buying into the US dollars.
But the US dollar is weak. It's very weak.
Yeah. It could be weak. It could be weak among the counterpart currencies. But when it comes when it comes to political instability, people still run to the dollar as a safe haven. When you're having war, when you're having uncertainty, people still believe that the dollar is a safe haven, the currency to run to. So that's why you have gold pulling down a bit. So, but if the peace talks and peace deals does not end well, we may see a lot of people buying gold again, to rally back up. So for me, I'm going to be buying where we have the silver zone, and I'm sure the buying pressure will be extremely high from that zone, because price has not come to test that zone for quite some time now. So this is the perspective. So let's see how it fares between now and
next week. That should be next week because let's see. For this momentum, we may see gold likely coming to this zone before even this pullback because the momentum is so high. All right. So that is gold, GU, US, AU. So cover. Let's look at some counter currency. The stock market is very, very bullish. The stock market are very, very bullish. And that's why the market is so weird. So weird. You can see how the stock market, these guys have closed above this major high that I was looking at. Oh my God. Can see this guy is a very strong high that I was expecting we'll see a strong pullback from. So for you to know that a lot of things is happening in the world. So the stock market gold is bearish, the stock is bullish, the dollar is bearish. You can see S&P 500 from the US, USD 30, all these are US stocks. So investors are pulling more money now, more on stocks, because they are buying stocks more and more.
So we call this, sorry for cutting you again, we call this risk on. risk on. When you have stocks going up, people are saying strong opportunities in the US economy. If you go to the US dollar, can you look at the Aussie US dollars? The Aussie US dollar should also be buying. You can see
Buy
you
now,
can
seriously.
buy.
Yeah.
So we are currently on the risk on period. What it means is that investors are people are ready to take on some risk. They have risk the optimism that they're optimistic, sorry, that the global stock, the US stock is going to
Go to appreciate.
should appreciate, So we are in a risk on period. People are ready to take on risk. So that's why we have the stock rallying, S&P rallying, and then also the US dollars rallying. And then when it happens like this, you're going to see gold coming down because people pull out money from gold.
From gold.
They pull out money from gold to buy the risk on assets, to buy the stocks, buy Aussie. They want to see if they can make some more money. But when
Even
we begin,
USD chef is
when we
coming
begin
down.
to enter, when we begin to
Even
enter,
chef. Chef's
yeah,
also a risk on.
yes, when we begin to enter the uncertainty period, or maybe if we begin to see some signs of war, or maybe they begin to strike the countries again with missiles, and then fears will set in, and people will begin to look for how to safeguard their investment. And so people will now run to gold again as a safe haven. So that is just the implication of what we have. We are currently in the risk.
So technically, the political gas is really playing out. It's really playing out in the markets. So we have JPY gaining strength over US. So for now, I think to position for buy on EU, GU, EU, it's more safer. AU, until the market proves otherwise. Even NU is bullish. So all those USD pairs, all of them are CUSD cards. Card is bearish. See, Val. Here I took profit. I run out. So if I miss out when this 4-hour candle close below this counter trend line, there will be opportunity to enter again. This guy is coming here, just like what happened on USD chef. So for now, I don't know what will happen next week. USD is still more bearish and gold is still more bearish. So those two, bear in mind until, let's say, gold rally to this 61 point, that's 61.8. That's a strong zone. And if gold start buying back, I tell you, if you get to this 61.8, this zone, and start buying back, the tendency is that you see all those liquid void gap that created, these are liquidity. These are external liquidity that gold is leaving behind. So if any buy occur, a strong buy continue here, so all these places are targets. All these places are targets. So it's a case of getting a strong buy here. Just leave your trade for a long time and begin to ride to enjoy all this ride to all these highs that growth has created, right? So all we can see now, in 4 hours, we continue breaking structure. I can tell you now that we have broken this another break of structure successfully from 4 hours now. So if we get pulled back before gold gets to this place, so maybe a pullback, then we can look for a sell opportunity down to this zone we are looking out for. So for now, you cannot really do anything. Even though you go to the, you need a pullback to sell, or you need growth to come to this zone and give a buy opportunity. Even when you go to a higher time frame, smaller time frame now, you can see the kind of movement. So when you begin to have this kind of slow movement, the tendency is that a buy may occur, which it can give us a pullback. You can see how that gap is there. So it can be an opportunity to go short again on gold. So we have a break of structure again, 15 minutes. So if to sell, I'll be interested to sell gold from this zone. That will be interesting. And for now, for buy, then until we get to this zone that we are looking at. Because if you want to buy it, if you have in mind that, okay, let me buy to this place, what if you get to this place, it crumble? Just like what happened here, small thing, come down, small thing, boom. So let's be careful and let's be guided. All right, let me just touch one or two, and that will be all for today. Let's look at what the J family is doing. This guy is ranging currently. Let's look at CAD JPY. CAD is also a kind of commodity that's supposed to have a bullish on CAD. So we'll go to 4 hours. Was looking at, okay, CAD has successfully come to this zone. Then I'm expecting bullish, it may not be today, bullishness on CAD, then to cause another break of structure above here. So let's see how that will run and how that will play out on CAD. But I'm expecting a more bullish on CAD to continue the uptrend that we are in. So continue our uptrend. So guys, that's it for my end. If you have made money this week, congratulations. Make sure you keep the money, you save the money. And those of us that hit stop losses, congratulations to us. Let's make sure that you don't take it to heart. Next week, we'll have a better trade. Thank you for your time. We meet again next week, Monday. God bless you. Bye for now.
Thank you.